Good morning all, hope you're doing well. You're having a nice weekend. It's bank holiday tomorrow in the UK. I'm not sure about the rest of Europe, but it is certainly in the UK. So it's going to be quite quiet, really. And so tomorrow I'm going to be taking it fairly easy. The whole purpose of doing the bulletin instead of the evening set because it's not going to change. I could do it in the morning on Sunday or in the evening. It won't matter. But if I do it in the morning, it will free my evening. So hopefully that's understandable. And also it gives you more time to view the contents as opposed to having it late at night. You've got all day to view it. So in the current state we are in now, we're in complacency, and it's likely we're possibly going to go into euphoria because that will depend on the technical data. So if we go above 80%, which is possible, then we'll be in euphoria because we've got lots of greens. Okay, the herd have gone slightly long, so it's worth noting. The big change was on the US 30, which I'll show you, and so the big change here is there from last Sunday to this today. There's been actually a big change, a big shifting on the sentiment there. And if we go at that rate, if we go, in that sort of big chunk, then this time next Sunday, this could well be in positive territory. But I think what will probably happen is that the herd will see the recent news events and then they'll sell because there's lots of bearish things going on right now. The new thing is China and Taiwan. And, obviously if that goes ahead, it could be legitimately bearish. It could be risk off. Okay. But what will happen is that the herd will most very, very certainly sell going into that risk event if anything happens. So it could be risk on in so much as if the herd sell, there's going to be an entity who's going to have to buy it, compelled to buy it, because there has to be someone to take the other side of that trade. Okay, so it's just simply an exchange. Okay, it's not necessarily evil or malicious. It's that if the retail guys buy, there has to be someone to sell, and that's all it is. And so if they sell, there has to be something that's there to buy. Okay, so it's not really necessarily it's out there, it's like a conspiracy or anything like that. It's just simply a case of just an exchange of goods, a transaction. Okay, and so that's the transaction, the significant shifting from last Sunday on US 30. And also France 40 has shifted too, and DAX hasn't really done much, and it's gone sideways. So remember what I said about the sideways sentiment on DAX, and I'll show you that. So there isn't much to say from the sheet because everything's been reset, and they're short pound and they're short New Zealand dollar, and they're fairly short the euro, the long yen and the long dollar, the long CAD and Swiss, and they're sort of sitting on the fence a little bit of Aussie. Aussie and euro are sort of at the 50% line, so we could theoretically look for longs on pound and New Zealand dollar. And so yeah, we've got the COT data video to come up shortly after this, but that won't be a long one. Yeah, I guess we could just look at the QDB scores. So we can see that Aussie's got fairly weak scores. We're looking at reds, and the whole point of this is that we're looking at the market bias. So you're not looking to trade anything that says range. You're looking for something that says sell. So that would have been a good one. Look at the weekly change in AU. Okay, so that was a good one. That wasn't a good one. That was actually a poor one. Swiss yen. That was a good one. The Euro Aussie. Yeah, positive. Strongly positive. The Euro Swiss. Weekly change just about okay. Yeah, that's positive. That was a good one. And that was pound Swiss did okay. So if you use this market bias, it's a very strong fundamental check, okay, because that looks at the country's GDP, unemployment, inflation, the unemployment change, and all that stuff. So it's really important not to trade anything that says range, just something that says buy or sell. And it's very, you can see it's been quite good. The only one that wasn't good was Swiss yen, and obviously there was a little bit of funky stuff going on with yen. Dollar Swiss was also good, and also the dollar CAD. So it goes to show that if you use this market bias, then you are on the right foot. Okay, so what I'll need to do is simply reset the scores so everything is reset, because we shouldn't have anything in the score change. Okay, so that's the sheet. Come to Discord. And I think what we'll do is we'll start indices, go down, and then we'll go to gold. Okay, so this is the S&P. Thursday night, this is them going long, and so we saw a big heavy reaction. And then I was saying to the guys in Discord, it's likely they're going to sell it because of the geopolitics. And actually, what happened with this is that they started to go long. They went aggressively long, which is unusual. See these erratic spikes? So that's them buying or going less short very strongly, and then we're seeing that price reaction. And yeah, and then obviously they'd had to sell. Then we saw this big dump, and we made a higher low there, and another higher low, higher highs as well. You could argue there's a lower high here, but still, we made a construction higher. So technically okay. And what happened is that at that point they'd sold. So we saw that big reaction, that big green candle, the blue candle there, the strongly bullish candle from them selling. Like I said at the top of this video, once they sell aggressively, you're going to see a strong reaction because that large entity is going to push price against the herd. Okay, so there's that reaction there, big pump from the crossover. So do get this set up, it's absolutely amazing. Okay, so we're going to be sandwiched on the S&P, but I think probably it depends on this, because if they continue to sell aggressively, up will come and beyond. Okay, so be careful. You're ready? Another strong one. Yeah, it's then we came, and you could argue maybe stops at 40k as well. So there could have been people coming in as well, thinking 40k. Well, it's a round number. They love round numbers, and so these guys got squashed really badly, and now we're seeing that descent. This is from Thursday. Sorry, this is Thursday, and then this is from Friday. Obviously, the close, and they shorted going into the close, and that action, we should be above this box, but we'll have to wait and see. And I think if we do go above the box, we're going to hit some resistance, and potentially those stops at 40k again. So it's very cruel. DAX, now this is what I said about the sideways sentiment, which we can see if we come back to the risk calc Sunday. The change is there's hardly any change whatsoever from a week. Okay, so sideways, and we can see, right, it's just that, it's just done that, it's just chopped. But we should be above that box. Okay, so up we could come, so be careful. And that's the indices taken care of. We'll do gold. Now what I was thinking potentially is that what's happened is that they're looking to buy as we're going into the close. So it kind of makes sense that they would, because they're looking left. Nice supports. There's a decent support line there. We held above it. They could be looking left and looking to buy. But if they do buy, we're going to get the crossover to sell. It'll be a risky sell though. And then this could be a resistance. So it will depend what happens here at this hexagon, but they had sold, so we should be above this box, but it will depend on the what if scenario. If you remember, the circles are the crossovers and the hexagons are the what if, what we don't know, what could happen theoretically. Okay, so that's just a summary of what, how we are going to be going into the next week. And we're in a state of complacency. We could go to Euphoria, and then we'll see those indices push up higher, potentially. And then we're going to go up to these resistance boxes, and then depending on the sentiment itself, we could push beyond, and it'll just be really painful for the bears. And there's lots of reasons to be bearish as well. And so obviously using logic, it's not gonna, it won't reward you. All right, so you've got to look at the sentiment. The sentiment's probably one of the most powerful things that you can have in your toolkit. Okay, so if you look at fundamental stuff and the news, then you're going to likely want to sell. And if you do that, and you think, if you think everyone else is thinking the same, then it's going to push against you, and then you'll be on the wrong side. So it's very good to get an appreciation of fundamentals and technicals, but don't neglect the sentiment because there is definitely an entity out there that reverses price, okay, and that takes the other side of that transaction, which you should have seen by watching these videos. So just a quick one there. Do the cut data video now, and I wish you a good day. And I'm around tomorrow, but it's bank holiday, so I'll be taking it fairly easy, and then we'll just resume normal activity Tuesday. Risk disclaimer for anything that you do in the financial world is that you will need to use very strict risk management. So if you don't have the risk management in play, you're pretty much gambling, okay? And we really want to be looking at trading, and we want to be looking at risk to rewards. And in order to get a good reward, you need to define your risk. And if you don't know where your stops are, if you haven't defined your risk, then you could end up losing all your capital, okay? So you need to know where your exit is, and then by knowing that, then you can forecast your profit. But if you're entering willy-nilly based on some information that you found on the internet, and you've entered without knowing where your stop is, you're going to encounter huge losses. So just to say is that it carries a huge level of risk, and it may not be suitable for all investors, and past performance is not indicative of future results. Okay, so it's a quick disclaimer there.